In the meantime, joining me to go through some more names to watch, Diane King Hall with some morning movers and fast market. It's great to see you, Diane King Hall, looking at Teradyne.
Yeah, Teradyne still moving higher right now off the back of its quarterly report card. Much better than expected results. Not the same strength that in terms of the stock reaction that we saw in the pre-market, because in the pre-market the stock was up more than 20%. They've obviously had their earnings call, so there's still some enthusiasm, but not to the same degree that we saw earlier in the pre-market. In terms of the trailing quarter, adjusted EPS came in at $1.80. That was better than expected. Revenue topping $1 billion, $1.08 billion, much better than the street was expected. It's one of the biggest earnings and guidance beats in the semiconductor space so far this season. Management outlook, not just better than expected, not even in the same realm as consensus was initially. So it reinforces the view that Teradyne is a core picks and shovel AI play here. And again, shares moving higher, but listen, it's already been outperforming year to date and on a year-over-year basis for Teradyne. It's first billion-dollar quarter in terms of revenue since 2021, so it's a major cyclical structural rebound that we're seeing here. In other words, investors repricing earnings power from here for Teradyne. Here's the guidance going forward. Q1, they're guiding for revenue between 1.15 and 1.25 billion. The street was only expecting about 958 million here. Q1 EPS, they're guiding for between $1.89 to 2.25. The street was only expecting $1.34, so well above what consensus views are. One analyst summed it up saying, they were bullish, but wow. AI is the accelerator here. They called out AI-related demand across compute, networking, and memory. It's more, obviously we know the AI chips are more complex, they're higher performance, et cetera. So all this bodes well for Teradyne. So it's not just a one-quarter story, clearly. There are clearly structural tailwinds here. Stock continuing to gain ground as we speak, so back up now, even more than when we started speaking. Nicole?
How would you like 40% year to date? It's February 3rd. I mean, you could just retire and, take the rest of the year off. DaVita, that's a name you're looking at, and that also is rallying, right?
Yes, DaVita gaining some ground off the back of its quarterly results. That one holding on to a big rally right now, up 18%, as you mentioned. Strong Q4 beat, 340 was how they perform on an adjusted basis. She was just looking for 316. Revenue coming in at 3.62 billion. She was looking for 3.5 billion. They've got a bullish outlook for 2026. Profit guidance, they're expecting upside there. They're expecting adjusted EPS of 13.60 to 15. That's well above what the street's forecast is. So there's some strength and confidence in reimbursement trends and operational momentum. Their results were driven by steady demand for kidney dialysis. That's a service, obviously, that's key for them. They had some higher reimbursement rates that helped lift margins during the quarter for DaVita. They also had a more favorable patient mix, and seasonal flu vaccine dynamics just helped support the strength of their results for DaVita. And management say that the cost pressures that weighed on previous quarters are stabilizing here, so you see some strength there. Now there are still some operational challenges that they have to work through. They're working through fallout from, they had a ransomware attack back in April, so they are still working through that, and that had exposed data of honestly millions of people, but they are seeing signs of a recovery. So, as you mentioned, how the shares are performing today, but they do have to claw back more.
All right, and as we look to see if we could get some back-to-back gains on Wall Street, I saw Pepsi was up almost 2% today after the quarterly numbers.
Yeah, and we know there's been activist investor activity around Elliott Management, around PepsiCo, so working through some shifts there that they want to see Pepsi do, but they beat expectations on both the top and bottom line. Adjusted EPS coming in at 226. Street was looking for 224. Revenue 29.34 billion. Street was looking for 28.97 billion. Net sales rising 5.6%. There's still some volume softness in North America, so that's something to kind of keep in mind. Management saying they see acceleration in both organic growth and growth across international markets. Global food volume, that did decline a little bit, down 2%. Beverage volume globally, though, up 1% there. There has been a pricing strategy shift here. They have some planned price cuts, Lay's, Tostitos, Doritos, Cheetos. They are also expanding into different types of drinks, functional drinks, protein, fiber. We know there's a bigger demand for protein, especially with the kind of expansion of GLP-1s, weight loss drugs as well. So they have to figure out what are the snacks that people are going to eat. It's going to have to be protein based.
Lay's, Doritos, Cheetos, Fritos. Diane, don't come on here and talk about that. Right now, what a great move. We've seen, as Diane noted, the activity from Elliott Management. I mean, we've seen a certain nice upward trajectory for this name here. I mean, it's up, let's say, in 1 month, up 10%. So it really has had a nice move.
Indeed.
All right, and raising the dividend, 4%.
Yeah.
Okay,
Good catch.
great to see you, Diane King Hall. Catch her later at noon.